Hello, my name is Jojo Rousseau.
And my name is Kirsty Scully, and we're both certified financial planners at Core Wealth Advisory Services. So we thought that today we would like to chat to you about making the most of tax savings opportunities that are available to every single South African. So Jojo, if you think about it in your experience, when you've been working with all your clients, what is the biggest missed opportunity that you've seen?
Well, Kirsty, what I've seen a lot of our clients do, they don't seem to maximize their annual tax deductible contributions every year. So you can contribute up to 27.5% of your annual tax income, or it's capped at 350,000 Rand. So that's a lovely tax break that you can receive every single year. But another mistake I see a lot of people make is you receive a salary increase or a bonus. And people are so overjoyed that they receive this bonus. They enjoy everything right now and they don't think about the future. So I would really encourage anyone that has a little bit of extra cash flow coming their way to remember to also save towards the future as well.
So in other words, if your salary goes up, you should also increase your retirement savings, as an example.
Exactly.
Yeah, I think that's very vital. Now, if I just think about what is the easiest way for people to do this, to actually benefit from the tax savings, really, it's to add additional money into your retirement savings on a monthly basis. So that could be using your pension fund at work or your provident fund, or for most of us, what we do is we ensure that we are using a retirement annuity to the absolute max. And bear in mind, now Joe just talked to you about the fact that you can invest the 27.5% to a maximum of 350,000. But also remember that any money that is in your retirement fund is actually going to be growing tax-free, because there's no tax on the interest, there's no tax on the dividends, there's no capital gains tax. So how wonderful is that, to actually have an investment where there's no tax? And I really think that's a great thing with retirement funds.
And another thing that we can't forget are tax-free savings investments as well. So once you've maxed out your contribution towards your retirement annuity, the growth in a tax-free savings investment is also tax-free. We do have limits, annual limits. You can only contribute up to 36,000 Rands every year, up to a lifetime contribution of 500,000 Rands. But it's still a nice benefit to make use of if you have that extra bit of cash.
Yes.
Another thing I'm also thinking about is just there's so much additional benefits linked to these investment vehicles, including that with a retirement annuity you can nominate beneficiaries. So these benefits don't fall in your estate and you can avoid hopefully executors fees. So Kirsty, what are the other benefits when it comes to these retirement vehicles if you want to leave a gift to the next generation?
Well, in fact, just what you've been talking about, the fact that you can put a beneficiary down on your retirement fund is really good, because I'm sure most of you have heard that it takes quite a long time to wind up an estate. Now let's think if, say, the one spouse passes away and it takes maybe 2 years, 3 years to have an estate wound up. The remaining spouse would probably be left without any access to funds. But the retirement funds, because there's a beneficiary in them, it means that that money can essentially transfer immediately to the remaining spouse, and that creates liquidity. That means you can still keep running your household because you've actually got that access to it. The other thing to remember with retirement funds is that there is no estate duty on it. Okay, so in other words, that can be considered a huge saving, because that saving is between 20 and 25% of your estate is actually saved because you've got the money housed in a retirement fund. And whilst you're still alive, if perhaps business doesn't go as well as it should have been going, and perhaps you go into liquidation, remember that your money that is in a retirement fund cannot be accessed by creditors. So they cannot take that. They could take your house from you, but they can't take your retirement fund from you. And I think that really, really makes it valuable.
No, definitely. And also for everyone that has a side hustle, is something important to remember, right? So Kirsty, before the end of this tax year that ends now at the end of February 2025, what are the things that we can do to ensure that we make the most of this opportunity?
I would suggest people make sure that you get in contact with a certified financial planner before the end of January, I'm going to say. And the reason why I'm saying before the end of January is because that gives us a little bit of time in the beginning of February to actually organize those payments and get them invested so that you can get that full tax deduction through the next tax year. So meet with a certified financial planner. It is the highest designation within the financial planning profession. And that is our 2 cents for today.